All right, so we have like bit of questions, so we'll start now. Okay, so let's just start from your weekly buys, right? Let's go to some like BOG. How do you get your weekly buys, right? One thing that I focus on mostly is not get biased. So I don't stick to a certain narrative. Means that if I'm just sticking to a bearish narrative or a bullish narrative and market keeps on presenting the opposite side opportunities, I'll be taking lots of losses instead of capitalizing on that. So, but yes, you do need to have a bit of knowledge, or you can say that bit idea that where price can go. So that depends how you do your analysis on the high time frame. Basically, you want to teach, treat it as a compass, and then your intraday is going to guide you how you want to trade that particular day. Now, how do I get my high time frame, or you can say that weekly bias is simply two or three main important things. I go, all right, so at the start of every week, I go on the daily time frame or the highest time frame that you want to go, right? And I try to mark two main things, or which are your key levels that price can react to, because if there's a key level and price don't react to, there's no mean to trade that. So first things, I like to mark the key levels on that time frame, and then your liquidity points. And with these 2 points, I like to keep the momentum in my mind, the momentum of the markets, right? Okay, so these 3 points will help you pretty much to get your intraday buys or the weekly buys, right? Let's just take a particular example of this one. Now, okay, let me just grab a nice little move, which is not a reversal point. All right, cool. So we're in this trendy market, right? Let's go and fetch for that will be much clear. There we go, right? So this is your high time frame, right? Now in this whole picture, right, there will be a lot of guys, right? No doubt. Okay, sorry, that are going to trade after seeing this as their inducement, right? Yes, this is valid. Good. Now, but okay, good. So the important thing for me is to understand market is bullish. We do have this particular IPA level. With that, if I bit zoom in, we are doing what? We are building a level of liquidity. That's pretty much it for my high time frame analysis that can guide me. So I know that this is the point of liquidity that price induced. Now, what are the next points, where price can move to and react and then continue its direction? So reacting to this point of liquidity, what price was doing? Building liquidity. Induce that. Where did we induce? Induce it to the key level, which is IP level. And then if I would zoom in, we did what? We reacted strongly with that, with the impulsive bullish candles. Now, once this is done, first we were trading away from this point. Now this is a point that most likely will be trading away from, and then this becomes your nearest objective, price objective that you want price to take. And obviously, if you have seen my few of other videos, this is your smart money trap. So this is how you need to understand your high time frame, right? I know I don't use high time frame POIs or all those stuff. Key levels are, I just explained the two key levels. Either that's going to be the EPAs and IPAs, or that's going to be the liquidity points. All right. So any confusion on how you can understand your high time frame? Same thing in in this context as well. So what do we have? We have again another high time frame IPA level where price is reacting to pretty much sort of a supply zone of whatever you want to see, or we did an inducement. Cool. Now we took liquidity. We will see a reaction of that liquidity. What price is doing? It is again creating a level of support, which is liquidity point, and then it induces that with vectors, rejection with vectors, creating a valid low. So now we will be trading away with this low. So we are keeping the momentum of the market in our mind. We are keeping that where price is reacting to until where it can react to, and then we continue with the trend. All right, so this is your high time frame. Okay, EPAs and IPAs. Okay, so let me just real quick mark it. This question is done. Yep, I'll explain the EPAs and IPAs, but before that, do you guys have any questions regarding the higher time frame that I just explained? Okay. Okay, so what about rejection points? So this one, body candle weekly or daily. I never use that, so I can't give you any opinion on that, right? I don't use such things, right? I just told you what I use. So, all right, cool. So, okay, this one is good. And we'll continue with the next question, which is this. So, how do you know when ETF has changed the directions? Two important things: objective, objective and intraday intentions, right? So these two things are going to tell you that is there going to be a shift in the high time frame? Are we going for a complex pullback, or are we going for, you can say that, a minor mitigation, a pullback for a minor mitigation, and then we move away from that? So these two things are going to tell you that. Now, okay, let's just see what GU is doing, because all right, there we go. I think it did took some sort of liquidity right there. Yep, yep. So GU took out this level of liquidity. Same thing we are going to do again, that where price is going to go as a reaction of this liquidity, and till where can we expect price to move, and then where it can reject from. First things first, what do I see? I see a level of support forming, your liquidity being printed. We have a liquidity low. That's what we expect price to do. Now, if I go on lower time frame, what do I want to see? See, one thing, you are trading inducements, right? Inducement low means price is going to move high, and inducement high means price is going to move low. Now, if high time frame did an inducement, which is this, what do you want to see on the lower time frame? Obviously, price showing you inducement highs to go lower, and that's what you want to do in this intraday, is to get aligned with the trend. Either that's a complex pullback or just a minor pullback for a mitigation to move away, right? Same thing in here. What do I have? I have a nice intraday key level. What price is going to do? Price is inducing liquidity into that IPA, and then we move lower, and there we go. We have this minor build-ups, inducement. So these, okay, where is that? So these should tell you that price is going to go lower, right? And then we don't have as such inducement in this leg. We have this inducement, and then we had this inducement, we had this inducement, right? And then what we did, we started to go back into a complex pullback, right? Now, how you can treat this pullback? Same thing what price did. Price took a level of liquidity. Now, what do you want to see? If price is about to go bullish, you want to see inducement lows to go high. So then the only thing that you want to do is to identify those inducements. So first inducement, we have that second inducement. Obviously, now you just don't ask me that are these sell trades or are these pullback trades tradable? Yes, those are tradables, right? And then what do we have? We have this level of inducement. So there we go. Then you just need to do one thing, is to follow the inducements, right? Till there is what? Till there is a shift in the market, and then price starts to do the opposite thing, building up, inducing to go lower, right? Build up, inducement to go lower. So this is how you want to align yourselves with the higher time frame and with the lower time frame trends. So any questions in this particular alignment, or how to know when it's a bearish or a bullish move? So obviously you need to understand this thing. If there is an inducement, there is going to be price objective, and once that price objective is done, that you know there we go. So once the objective is done, then this inducement is no longer valid, and then we wait for a new inducement. So it goes this way. We have an inducement, there is an objective for that inducement to be done. That's good. Then we have a new inducement, and then there is new objective for that inducement, and then when it's done, so this cycle repeats again and again. Okay, this one is done. All right, cool. So now let me just so EPAs and IPAs, right? I'll try to keep them very precise because obviously I have a proper in detail video recorded for this only that I'll be uploading real soon, right? So yeah, but let me just give you a bit of basic understanding of what these levels are. So you guys are familiar with the fair value gaps or the imbalances, right? And this is kind of similar, but these are the inefficiencies in the market structure. So what is the inefficiency? So in this bullish example, if we want the market to be efficient, we want price to come back and tap its last high, which is going to be this, and then continue going up. But if it is such scenario where market fails to tap its last high, then we have an inefficiency, and this inefficiency we call it IPA, right? Which is inefficient price action, IPA. And when the market taps back to its last high, then it is EPA. Now you can utilize these key levels as your price objectives. Say price had level of liquidity, price induces that. Now we can utilize this IPA as a potential price objective. That price can potentially come back to fill out this inefficiency, make market structure efficient, then starts to move high. The other thing is that you can utilize this as your key levels. That price can potentially react after inducing liquidity and reject to continue its trend. So this is a basic understanding of EPAs and IPA levels. All right, so any confusion in the EPAs and IPAs? markets have taught me the most, I won't lie, bro. Because it's all same thing, right? Just it's here marketed in a different way, but it's all the same crap. Okay, bro, I don't use algo candles, whatever those are. Alright, so how is IPA and EPA helpful in intraday play? If I can get a good example of that.
Pissing me off.
Alright, good. So such scenarios, right? It's simply the same stuff that I just explained you, right? We have an inducement, breaks a structure. What are the potentials at price? So see this momentum. So if price didn't do anything to the left, what are the chances that price is going to give you a proper pullback towards those extreme areas? And if you're waiting for those extreme areas, you are potentially missing out the whole move. So that's when the EPAs and IPAs helps us. The market momentum is quite strong. We would like to see price inducing liquidity in those levels, and then we can trade directly from those levels instead of waiting for those extreme mitigations. That's one way EPAs and IPAs can help you in intraday, right? Obviously, you guys need to wait for the proper in detail video that I'll be uploading real soon. I haven't watched his, content. You can ask someone in the server who has watched his contents and is quite successful. So I can't give any opinion on his, videos or his course. All right, this one. When to accept Asia high or low is not getting swept in continue trading. So this all depends on the context of the market, right? You can't you need to understand one thing is that everything works when it's aligned with the context, when there's a whole context to back that thing. So then you know that from which points you really want to trade. It's not always like Asia high low inducement and you go high low. It's sometimes retail heavens, all those stuff. So if you are trying to just trade Asia high low inducements, you are trying to trade a certain pattern, right? And that's not helpful in the longer run. You need to understand the core principles of that stuff so that whenever there's a different scenario, you don't lack, right? Otherwise, if you're just trading it as a Asia high low inducement and price reverses from there, you are trying to trade the pattern and it won't help you. Understand the core concepts, like when price can induce it, what are the chances that price will induce it, all those stuff, the objectives, everything. Same for this one. Everything, works with a context, right? In this example, now we have an intraday inducement, which was this one, right? So this inducement has an objective, and we can say that this is all liquidity. So this is potential liquidity point that price can move towards on the intraday level. That's one way of looking at it. And then the other way of looking at it is price will induce this low and then I will start to buy. And that's again against the context and against the whole day. So everything works in a context, and you need to understand the context first without getting in the trades. Just give me a second, guys. Just a second. Okay. So bro, this is really important, right? There we go. Understand one thing is that you are not trading point of interest. You are not a smart money trader. You're not a supply and demand trader that you will draw your supplies on. And when market comes, the only thing that you want to do is sell, 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 and sell. That's not how it works. You are trading liquidity here, right? So you need to understand liquidity before understanding POIs. POIs are just a confluence, right? It's not a trading strategy that you want to trade. So liquidity then comes. So there we go. I have this trading plan. You can say that that you guys can follow if you want to. So first comes liquidity, then inducement, reaction, mitigation, confirmation, and timing, right? That's your plan. You're not trading the POIs and all those stuff. That's all. That didn't work for me, and I don't know if it will work for you. So you are trading liquidity here. First, understand liquidity, right? POIs comes far, far behind that. Yes. So that's one way of using that, right? There are multiple scenarios, different cases, that how it can happen, and I will go in detail in the YouTube video, but for now this is the best basic understanding that you can utilize. Yes, you can. Okay, you can use the same method on futures or anything, right? It works. I trade Nasdaq, I take trade indices, so it works pretty well. But I haven't used this in a while. The momentum mitigations, that this didn't work the same way, right? For me especially, because it's never the same thing for the markets. Yes, there will be, again, it all comes to the point that you need to understand the core principles, right? Once you understand the core principles, then everything is easy for you. But now what I trade, or how I understand smart money traps, are based on liquidity and inducement. That's two ways I determine what POI is, or what are the points that price is going to trap. And yeah, so I haven't used this in a while. Depends what price is doing at that moment. Yes, if that's a high time from smart money trap, we can have a reaction for few days as well. If that's your daily or H4 smart money trap, we can have a reaction for many days till we induce or mitigate the next valid point and continues going high. The next thing is that this is FFS, which is for fuck's sake, price won't respect it, price is just going to shoot it. So we have different scenarios for different stuff. But what important is you understand how price is reacting after mitigating those stuff, right? That will tell you how good the reaction is, or how, you know. Okay. All right. BOS continuations and inducements. Okay. Vendetta can explain this better than me, because I don't really mark all those stuff, the breakout structures, continuations. If he can like get his open his mic and explain that, that will be really good.
Sorry, what was the question?
The difference between the breakout structure, continuation, and inducement.
Liquidity.
There
As
we
simple
go.
as that.
That's your answer. Um, if you can bit explain, that will be really good for them.
Yeah, so an inducement is a graph of liquidity. So, and a burst continuation is just a structural cycle toward a liquidity that could be a mitigation on a high time frame or a proper inducement. That's about it.
All right, there's your answer, bro.
And two things you need to understand: the burst continuation. This is structural cycle. Inducement is inducement cycle. It's two different things.
Yep.
Also, there is a question in the chat. What are the key signs to avoid being trapped by fake POI? There is no such thing as fake POI. If a POI is fake, it's because you didn't write the POI correctly. That wasn't a POI to start with, if that makes sense.
Yep. That makes sense. All right, good. So, what courses? Okay, bro. Honestly, lit is enough for you all, and then having a good understanding of the market structure. I'm not talking about the ones that smart money concepts use, but what are the valid market structure points where the liquidity is? That these two things are more than enough for you all to get really good at trading. So lit, you're gonna understand liquidities, inducements, how to trade them, and then the market structure. You can watch YouTube, you can just learn that yourself, understand proper market structure where liquidity rests, and you are good. So these two things, especially the market structure, really helped me. Understanding proper market structure helped me quite a bit in my trading journey. All right, so how can you show us how you start your day, from which time frame you started, etc. Okay, so okay, let's real quick do this. For me, right, if this is any day, not the start of the week, but let's say it's Wednesday or anything, I usually start from H1, understand what price is doing. So say we are at this particular point in the market. So for me on H1, understanding two things: we are bearish, seeing to the left what we did. Okay, price grab this liquidity. Is there something valid? Okay, where is that? Nothing valid. We have a level of liquidity, which is this one. And what else do we have? We have this extreme POI, which was responsible for what? This inducement. So we might react to this one. That's my high time frame. I drop down to the intraday time frame, understand what's happening. So I see we have multiple breakout structures in here, inviting a lot of smart money traders. And then with that, we have a level of resistance forming. So this is my what? This is my liquidity point. We have Asia session. We have a nice build up in Asia, leading towards an inducement that is going to fuel the move up, which will do what? Which will take out this liquidity. Once it's done, we come back to this checklist or whatever you want to say that, which is what we have liquidity. We identified the liquidity. Did we have the inducement? We had the inducement. Do we have a valid reaction? We have a valid reaction. Is it leaving a valid inducement PY? It is leaving a valid inducement PY. And then the next thing is you wait for mitigation, confirmation. Timing is just an extra thing, and then you target the next liquidity point, which is going to be this and somewhere to the left there. That's how I start my day. Okay. So, any questions on that? Bro, this should not concern you that do we have the high of the year or low of the year, right? You are intraday trader, you're not swing trading, right? You don't want to catch the high of the year and then wait for 3 years. That's not your concern. You are here to trade intraday, right? this stuff is not your concern. This is not your concern. What my concern is, if I'm trading intraday, is last 2 or 3 days. That's it. That's what your concern. That's your recent data you want to work with, and then you want to add the historical data, which is previous data, past data. It should not be that past in the long. So this is like few months ago, right? So I don't really care what's in this, but yeah, I do need to know where is liquidity and what are the potential points price can react to. So this is not your concern.
I can respond to the last question.
Yeah, go ahead.
Simple. You don't know. No one in the market knows what's going to happen beside the big player. What you do is you react. So if you try to predict the market every time, you're going to get lost in those so-called prediction. Price action the is how the market speak to you. Okay, market can open tomorrow, even if you are like bullish on a higher time frame. There's a higher chance I can take a bearish position for a pullback toward a different zone, etc. There is no prediction. There is reaction. Simple as that. That's why we have key level liquidity. That's how we wait for inducement. That's how we wait for mitigation. You wait for a high probability zone where something might happen, and if price action show you within that zone that you have a reaction, then you capitalize on it. There is no such thing as predicting. If you try to predict too much, you're gonna get lost in those predictions and you will lose money. You won't be profitable, especially on an intraday level. Because on an intraday level, you can sell and buy on the same day. That's the swing trader approach. That kind of mentality.
Yeah. And also there's a difference between having a plan where market can potentially move and then predicting that market will go in that certain direction, right? When we have a plan, we are quite aware of the possibilities. It might not go as we plan, and then we have the opposite side possibilities as well. It's a bit different between having a proper plan where market can move and then predicting market will move to that point.
Exactly.
Sometimes double inducements. Yep, this is good. So when we do double inducements, it's quite simple. You zoom in on M1 time frame in there and understand the reaction. So if it's not okay, what is this? Let me just so where is that? There we go. So if it's something like this, price induce and price is just bit waiting there. Why is price waiting there? If that was a valid inducement, price should move away, you know, with speed, with vectors, all those stuff. And if it's not doing the same thing, then there's a high chance price is inviting early sellers or buyers. That's what I call injection of liquidity, right? And that injection of liquidity is going to be your final inducement before the moves. Okay, there we go. So okay, I didn't trade this day, I didn't trade this week. Honestly, I wasn't okay feeling well, but this is a good example of that stuff, right? What do we have? We have an inducement right now. A lot of you got you know are just going to sell from these POIs, but you don't really understand the market intentions, what price is doing. Is it the same thing that I just wrote? Yes, it is. Price is just inviting early sellers, and this is your injection of liquidity, which is most probably the final inducement before the move starts, right? All right, so okay, Yes. And yes, when PRs are high probability reactional zones, right? Oh, I didn't trade this week. I wasn't uh good. I was sick, so I couldn't trade that this way. There were like a lot of good opportunities in the markets. I've seen a lot of guys trading this week, and it was really good. Especially the last few days were really textbook setups. We had really clean setups in this week. It's not compulsory the last 3 days, but what you should be doing is you should be working with the recent data, right? Because the past data isn't a concern. Yes, you need to be aware of that, right? But recent is what is going to give you the intraday bias, or what is about to happen on intraday. And then there comes a high time frame influence that you know we utilize as a compass. Like when data says that high time frame is your compass, and intraday is going to navigate you through all those directions. Okay, so what I personally like in this one is what reaction I am waiting after an inducement is that once an inducement is done, I would like to see price moving away aggressively, like it moved in an aggressive manner to take out that liquidity, leaving a nice POI that we can trade. I don't really want price to take an inducement and starts to show signs of weakness, which is most likely a build-up and injection of liquidity that most probably is the final inducement before going lower. So that's what I personally look for the reaction after inducement. Okay, so any other questions? And I think we're we're good. Well, bro, this is my checklist, right? This is my checklist for any single setup that I take. That's my checklist. What do you mean by entry zones, bro? Can you please elaborate that? Right, so bro, you don't want to focus on your stop loss, rather focus on what the risk reward you are getting, right? Average sale, sometimes it could be 1 to 2 pips, sometimes it's 3 or 5 pips. What's matter is that you're getting a healthy risk reward, right? For me, anything above 5 hour is just golden nuggets. I take that. For me, the criteria to enter a trade is that I get a minimum of 5 hour. Right, so I don't really. Yes, RBS is one of my entry models, but I don't really, uh, you know, you can say that just depends on RBS as my entries. I have quite few entry models. Flat, bro, you are a moderator. Come on, stop missing, man. I'll be doing a public challenge. I don't know. I'm trying to create my FX book and try to, grow a small account like 2 or 5K account. Uh, and that will be publicly recorded. I'll share the link as well. Well, okay. Where are you guys learning this stuff? I haven't like I don't even know what a fractal zone is, man. Bro, yeah,
I'm pretty sure there is a new guru that just rename everything that was already in place, and that's where all those new terms come from. I'm pretty sure.
fractal zone, bro. I haven't heard this shit. Right, so my main pair is EUGU and then indices, metals, and then I have this okay UJ and UF that if I don't see any clean setup on my main pair, I go to UF or UJ. That these are the pairs that I trade. Focus on simplicity, right? It doesn't matter that it doesn't work this way that the more concepts you apply, there are high chances of you getting profitable. It's the opposite way, right? The more you try to make trading complicated, the more you lose. Profitability comes from simplicity. That's what I have learned, in like seven years in my trading journey. The way now I trade is this stuff. I have a one line for an inducement, and then the next line, a box for my entry or whatever that is. That's how I trade now. I don't really mark every single details, whatever that is. I like to keep it as much simple as I can. So simplicity is the king, bro. Understand everything and then try to make it simple as much as you can to your understanding. Just not sticking. All right, so I wrote, I think, one or two threads, right? So first things, mental breakdowns, quite, becoming emotional, and then they don't really stuck on anything, right? They try a strategy for a week, 2 weeks, or maximum a month. They don't see results. They shift to a new one, and the cycle keep going. And if someone sticks to a particular thing, right, and still they don't make it, that means they're learning from their losses or they're learning from the mistakes that they are making, right? So if you don't learn from your mistakes, you repeat the cycle, right? So this is your mistakes, and this is the way you're gonna learn. So you just keep going this and this. You don't try to go the next way, which is learn from your mistakes. People backtest, right? They speed run the backtest. That's not how you want to do backtest. Backtest isn't the way that you want to cover a week price section or a month's price section. Backtest is like understanding every single stuff that you miss on the live markets, and then backtest for 1 hour, 45 minutes, and try to backtest only one day with proper details, and you will understand much better, right? Backtest isn't speed run that you just want to cover all the price section in a single day. Oh, I trade personal accounts. Yeah, I do have a few prop firm accounts, but I don't really trade that much. I trade my own accounts. EU, this one.
To respond to Vlad, I think the first reason why people are not making money in the market is because they have a big ego.
Yeah.
People have a really big ego. They're like, how many times I made like rookie, they just came in the market, they say, oh, I'm gonna make my own strategy, I'm gonna fuck up the market, I'm gonna fuck the bank, I'm gonna play, I'm gonna outplay everyone. No, you won't do shit. The reality is market is moving in one. The market, there is one solution to make money on the market. That there is few different ways, but there is one direction to make money on the market is to follow the elite, is to react because they move the market, not you. It's not with the $2,000 or whatever that you're gonna make the market even move from a fraction of a pipette, right? And still people are coming and they don't want to listen. They don't want to listen. That's the first thing that we have with a rookie. And with the lack of accountability and the big ego come the lack of journaling, the lack of it's just crazy how trading is actually a psychology warfare. It has nothing to do with technicality. trading is actually simple,
Very
but it's
simple.
not easy.
Very simple. Trading
Okay.
is really simple. Okay.
Uh,
You guys can ask
So
the guys that I have told them trading is simple, and once they try to make it simple, it works.
100%. Look at the chart.
Yeah, it's
The
real
price
simple.
is either going up
Or
or
down.
down.
Yeah.
That's it.
Yeah.
So why do you want to make that thing complicated?
Yeah.
For me, it doesn't make sense.
Bro, fucking
So
a
yeah,
chicken can pass a problem challenge. Why you guys aren't?
yeah, and people are focusing on prop firm straight away. Just put $100 on your personal. Try to build up to 200, 300. Try to enjoy the process, have fun, and then
Yeah.
after that, trust me, you're gonna pass all the prop firm and everything.
Yep.
You're gonna make a lot of money after.
Yeah. You won't learn anything from prop firms, right? It's like $40 or $50 for you for a 10K account. And if you lose that, it's like 40, $50 for you. But when you deal with your own money, you learn a lot, right? You try to understand everything before taking a trade. You aren't like a blind shit taking anything. Okay, so bro, the technicals, the charts will tell you where is it going. Either that's all right. So this one. No, not this one. This one, right? You don't really need to catch the top of that crash, right? Once it started, then technicals will 100% tell you that is it going to go more lower or going to go high. Which platforms are the best? Okay. Well, 5%ers are one of the best ones, right? FTMO, they are good, but it's not tradable like the way we trade on M1 or sometimes second charts, right? It won't work. All right, so any more questions, guys? Oh, yeah. So trading, understand this as well. Okay, what is that? There we go. Yep. You can't really catch all the moves. Trading is about catching the most probable move or the part of the move in the whole leg, and that's when you capitalize the most, right? You don't want. I see a lot of guys in this server, they are buying from there, selling from there, buying from there, selling from there. They try to trade every single move, and trust me, that's not how you make money. You can go and check any single successful trader, they are in the same way. Understand less is more. Quality or quantity. Understand these facts, right? You don't need to trade every single day. That's also a fact. And you can't catch all the moves. Yes, yep. Yeah, we can have the backtesting session. Uh, this coming weekend, I can do backtest, right? Yes, you can use the trade copier with the performs, but the master account needs to be your own account, and you need to ask the firm before doing that. Right, so any other questions? I had one, okay, one time I had a problem with a big payout, and then it's all good. Right, yep, skill matters, right? Because if you have the skill set, you can easily flip the accounts. You can grow your $100 account to 200, and then the compounding effect, it's going to just make you good. Bro, I haven't watched reward score, so I can't really say it's good or bad. I haven't watched Liquidity Hunt FX, whatever the guy is, his content. I have watched the adventure, right? And I know what's in the adventure, and yep, I can tell that it's good if you put the effort in, right? If you work properly, if you understand it rather than understanding it as a pattern. Because a lot of you guys understand daily cycles as a pattern, it's retail heaven, whatever that is. You need to understand the core concepts of that stuff, because when the pattern isn't the same, you guys will lose. But when you understand the core principles, you don't really care that either that's the pattern as it's explained in those videos or not. Yeah, so you need to improve that stuff, right? Because everything or anything isn't 100%, right? Pretty much for someone adventure is 80%, then the rest 20% is their own working. For someone it's 30% of the stuff, and the 70% is going to be their own workings. But you need to put the efforts, right? You need to work.
Are you guys talking about courses or mentorship? That's two different things. Yeah, to respond to Maverick, this is why I'm talking about mentorship and courses. They are two different things.
Yep.
Like for example, RAIM, the complaint you can see on Trustpilot and stuff like that. There is no mentorship.
Yep. So
It's
mentorship is
just
like
courses.
grabbing your hand and taking you on every single step that you're going to encounter in your trading. And courses is like, all right, you just give them the videos and anything, and that's it. Then it's them and the videos. Either they learn or no.
I've known a few people that were into leads with RAIM, and they all complain about mentorship. That wasn't there. That wasn't present, to be honest.
Yep. Tech says you open an offshore LLC and you're good. Yep. Or just deal with crypto. Sometimes you're gonna pay the tax, but yeah, it's easy if you have like small payouts. You can deal in crypto, but once it gets big, right, you need to have an LLC in such tax-free zones, tax havens, and you're good.
Yeah, you need to pay tax no matter what. The goal is to pay the less. That's it.
Yeah. For me, this is different. For anyone, it's going to be different. I stick with my timing because it helps me trade less and catch the best moves. But timing isn't 100% necessary, right? It's just a confluence. So you can say that at this time there will be the volatility in the market, so I can get my break even quick, I can get my partials quick and leave the charts. But if you don't consider timings, then you can take that trade. Or if you have small payout, then just have crypto, and then have a crypto like Visa or MasterCard, and then you're good. Just with that. All right. Any other questions, guys, regarding technicals, apart from those courses and mentorships? Bro, I have a crypto card and it works everywhere. I use that, right? I don't use my bank card for day-to-day use or anything. I just use my crypto card. I'll share that one, right? In the server with the link, everything.
Guys, if you want to avoid to pay tax, there is different ways. Just
Yeah.
ask a ChatGPT, because I don't want to say anything on the call here because it might turn against me. But
Alright.
yeah, there is a way not to not pay tax. Just ask ChatGPT. There is safe haven. Depend if you want to get paid into dividend or if you want to get paid straight away to your account. If you have a prop firm, for example, prop firm doesn't want to pay on LSC sometimes. They just want to pay on personal
Yep.
for tax reason. So it's case by case. Just as ChatGPT is going to respond. I don't want to say anything because that's financial advice, and I don't want to say that. The only thing I can say is I pay 5% tax. So if I can do it, you can do it. Let's just look at it.
So I do that in, few of my videos, not every video, because, it takes quite a lot of time to just explain that stuff. To explain my whole backtesting session. And I do that frequently, but mostly it's going to be a simple backtest, and then I'll try to do explanations more. But, for someone to understand the explanations, they need to understand the basics, right? And 90% of the people lack at basics. That's the reason I don't really explain most of my back tests. I really wanted to explain my trades, like I do my trade recaps, all those stuffs, but before doing that, I want to make sure that you guys all are pretty good with the basics. So whichever terms or whatever I say, you understand that.
And also, there is one thing about, I mean, that is related to that. You guys need to learn how to reverse engineer things. That's really important. That's how Spanky became profitable. That's how I became profitable. You need to reverse engineer things. You see something happen many times in through all the diverse videos that Spanky did. Just look at it is and pause the video, mark down everything that happened, and try and go on chart for like 100 hours to try to see how many times these things happened, etc., etc. If you don't develop that kind of a scientist mindset, um, you won't be profitable, or trading will be extremely boring for you.
Yep. Well, how do I prepare for the start of the week? Sengo knows that I wake up like 5 or 10 minutes before London Open.
This guy doesn't prepare shit. he sent me he sent me a text. He's gambling on a casino website before trading. um, and and it was like 30 minutes before
London.
London Open.
Well, yes, like yesterday, I also shared that I lost like 80% of my capital, and then I made 60% of it back. I mean 80% and then 60%. So I ended the session in 60% profit. Damn, that was intense. But I had a good session after a long time.
Yeah, that was 3 weeks ago. Good week.
Well, you won't see me saying that you can't trade like me. I have said like it multiple times. Like there are potentials in few guys that can trade better than me, right? You need to understand that. You, be sincere with yourselves, right? Don't doubt yourself and then just put the work in. You can 100% trade better than me. That's not how it works. Bro, if you are learning from a guy that says you can't teach like so you can't trade like me, then why are you paying him to teach you?
Yeah, this is.
That's that's
I
like
don't get.
dumbest shit you can do with yourself, man.
Yeah, I don't get that things. You can trade like me. That's. But yeah, I mean, I kind of guess understand what you're talking about. But if you pay someone to teach you how to trade, the what you want is actually to trade like him, right?
Yeah.
Or close enough. Uh, that's
Yeah, yeah. Like what I mean is when it comes to different scenarios, even if I pay someone as a mentor that is teaching me, we will always be thinking like differently because of the psychology and shit. So
Yeah,
it will
so
yes.
never be like 100%.
yeah.
So that's what I mean. So like when we look at the chart, I can do something like maybe I take like a later entry. Sometimes I can take an earlier entry. Maybe it works, maybe it doesn't. But like at the end of the day, we can never trade 100% like the other people because we are all humans. We're
Yeah.
all like
Yep, yep.
thinking differently, but we
Yeah.
can just adapt and try to like make
You
it work
yeah, so
so
you
we
can't take the
ourselves
same
can
trades,
understand.
right? There's a difference between taking the same trades and not, trading like the guy that teaches you. Obviously, you'll have a different thought process. He's going to have a bit different thought process, right? But
But
there's a difference, right?
yeah, but you know what is funny is Spanky and I as a we had like different path on our trading, but 95% of the time our analysis are 100% identical. There is no many different way of trading liquidity.
Yep.
There is only one way of trading liquidity, which is market flow. The liquidity concept, like there is only one way of trading breakout trader. Okay, you wait for the high to be broken, and then you enter and you put a stop loss on the low, on the high low. There is no many different ways of trading one strategy. That's what this. There is one strategy. It's called liquidity, right? You can have a different entry setup if you want to, based on your experience and stuff like that. But what we actually play a role is your relation with money. Like for example, we can have the same trade, but I will risk 1%, you will risk 2%, and another person will risk 0.25% because he's afraid, because he doesn't trust in the, as the or whatever the reason. Because his journals say he feel more comfortable by risking 0.25% and not 0.5%. That's where the different way of trading will play a big role.
Yes.
Okay.
Yep. And also try to gradually increase your risk, right? And be flexible with your risk management as well.
Okay,
Go.
I have one question though.
Yep.
So sometimes as like a beginner, when you risk too much,
Yeah.
you always like check the trade, check the trade, check the trade because
Yeah.
you're so nervous, you put so much money.
Yeah.
Does that mean the risk is too much or that the
Yep.
strategy isn't like
Yeah.
100%?
Two things, right? You don't trust your analysis, which which means that you lack by data that can back your strategy, right? First reason, because if there is enough data to back my strategy, I'll be comfortable risking a big amount, right? Because I know that in the end there will be a high chance I will end the week or the month or the year in profit, right? First thing. The second thing is that yes, you can't tolerate that numbers. So then there comes the way that you gradually increase your risk. You need to understand how you want to create a buffer, which is really important, right? Every week you try to take a trade, always create a buffer that is going to be utilized as your business cost, right? Which you will pay as commissions, or say that you had a good trade, you made 2%. Now that 2% isn't your payout. That's going to act as your business cost, right? So you will pay commissions on that from that 2%. If you lose the trade after that, that is going to be cut from that 2%. So once you have the 2% buffer created, then you can bit increase your risk, create, have more profit percentage, and that's how you gradually increase your risk. And that's the best way to trade the platform as well. So create a buffer, always create a buffer at the start of the week. So if any shit happens or you start taking, you know 2 or 3 or 4 losses, you won't be like minus 4 or 5%. You'll be like minus 2% or 1%, most case scenarios, right? Worst case scenarios. So understand how you want to create buffer for the week.
And guys, you need to practice. I mean, it's like driving. The first time you drive, you over focus, blah blah blah. You scared of the priority, all the road sign and and then you become comfortable, and then one day you have an accident, and because of that accident, you have a bit of trauma. You scare again, and then you try to learn to drive again properly, blah 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 blah. It's the same thing on the market. Like, you can expect, because you learn the strategy for like 2 months, that you're gonna like feel like a fish in the ocean. It doesn't work that way, you know.
Yep.
It's a build-up process.
Yeah.
Takes time.
Everything
I
takes
probably
time,
have that.
man.
Yeah,
Either
I
the
probably have like
yeah.
10,000 trades recorded. I don't know. It's just, yeah. It takes time, guys, and eventually, if you're strong enough mentally, you're gonna get there. It's like becomes like a surgeon. It will take you 12 years to become one, right? Here, the good thing with trading is you don't need to spend 12 years, because you have all the data available. You can literally backtest 6 months worth of data within 1, 2, 3 weeks. You can gain experience really quick and fast with the tools that you have at your disposition, like FX replay and stuff like that. When I started, we didn't have FX replay. I could only backtest on TradingView, and there were probably other tools, but I wasn't aware of it. But yeah, I mean, you have all the tools nowadays to be profitable. Quicker. Sorry.
So how do you collect the data. Yes, backtesting is one way to collect the data, and then the trades you take, that's the other way, right? I have like more than 500 trades that I have taken and that are in my system, right? The, the proper markups, what my thought process was while taking those trades, all those stuff. That's how you collect the data. And then you can now, bro, you have like AIs and all that stuff. So now you can let the AI analyze that data for you and you'll have all the stats, all the graphs that you need, right? For us, we need to have all the stuff, do that manually.
I have a question though.
Yep.
The thing I'm struggling with is every time when I mark shit up,
Yeah.
I sometimes like confuse myself
Yeah.
when I'm trying to do stuff. Like sometimes I do too much, sometimes I do too little. Like I can't find like a middle ground.
Mm-hmm.
And when I'm about to take the trade, sometimes I just confuse myself. Like I'm overthinking the whole like process. Is there a thing like is there a tip to
All right.
not
So
overthink?
you are trading your personal account, demo account, or prop firm account.
Uh, Prop firm.
All right, cool. I would say the best way to overcome this stuff is that you deposit $100, take a trade with 0.01 lots, right? So in that you won't lose anything, but you will have a set of data that you will record, right? And then once let's say you take 100 trades on that account, and on that 100 trades, there is no point you won't learn anything. You will learn something. If you don't learn anything, then you are not sincere with yourself. You are not trying to help yourself, right? And then you just analyze all those trades, what you did wrong, what you did right, and then write those two stuff, what you did wrong, what you did right, and then understand what you did wrong, how can that be changed to how you can do it correct, right? And then you repeat that process again with those new changes, and then repeat it till you have a solid data, a solid strategy that is backed by a valid proven data over the past years. A lot of you guys think that you're gonna buy a 100K prop from account after watching few videos and you're gonna make few $1,000. That's not how it works, right? Start small, right? If you want to take a prop from challenge, take a 5K prop from challenge, right? Pass it by a 10K, pass it by 25K, pass it by a 50K challenge, right? You don't want to simply go and buy the highest possible challenge, which is 100K or 200K accounts. Start with the stuff that you're comfortable losing so your mind don't fuck up the whole process, right?
Um, but bibliothèque. That's okay. That's
Yeah,
one name.
yeah.
Okay. Do you mean in analysis? You confuse yourself when you do the analysis. That's what you mean when you live trade.
No, like when I draw everything out, I have the analysis,
Yeah.
but sometimes I'm getting confused on like
Yeah, so that's
sometimes the analysis itself or sometimes like which direction it will go.
okay.
So in my experience, I just don't take the trade, or I just take like I just draw the trade on TradingView, but I'm not actually placing a trade just to see like
So that's
how it should
execution
go.
problem, right? Bro, if
Uh,
that's an analysis problem, you gotta work on the analysis, the technicals, right? Which is quite easy. And the most difficult thing is that overcoming the execution fear.
But what do you mean when you say that you confuse yourself? Are you confused about the direction? Because if that's the case, it means that your analysis is not well done.
Yep.
Because analyzing the market is supposed to remove any confusion. If I look at the chart right now and Spanky remove any indication in there, so even the session indicator, I would be lost too. Because what day are we? What is the beginning of the day? Where I mean, there is no indication, nothing but price and time. And then we had the session indicator that tells you that allow you to do daily analysis, and then you have the high time for that. So you need your so if you're confused after analyzing the market, is because you didn't do the analyzing right. It's supposed actually to remove confusion. So the best thing you can do if you're confused, delete everything and do it again.
And if it's execution problem, then follow the thing that I just told you, right? Over $100, can't trade that till everything is good.
Yeah, that's actually I did that in the past.
Yep. Can you answer this question, Senga?
Which one?
This one.
After liquidity results, you wait 5 minute bursts. After liquidity H1. No, you don't go from 1 hour to M1. That will be the best way to get yourself completely wiped out. So the thing is, okay, a 1 hour candle, within 1 hour candle, you have on M1 accumulation, distribution, reaccumulation, higher high, high and low, low high. You have like a 1 hour structural. I mean, within 1 hour candle, you have a 1 minute structural cycle happening.
Yeah. So
You
if you're
can't
just
jump.
doing this, right, you're just trying to catch a falling knife or all that
Yeah.
stuff, right? This is
Yes.
just making yourself fucked up. That's not how it works, right?
And you need to work on the relevance of not everything is inducement.
Yep. Sometimes a break of structure. So how are you gonna understand which is a break of structure, which is inducement? And I can bet that the 99% in here probably don't know the difference between a break of structure and inducement.
100%, I'm sure. So this is why we tend to separate this in structural cycle and inducement cycle. This is two different things, guys. I've said that at the beginning of the call, and you need to this is why I think the lead adventure is
Facts.
probably yeah it's not as good as people might think. These things need to be reviews. I haven't watched it, to be honest, because I figured out all this shit myself before this was leaked back in the day, and I was already doing good, so I didn't want to confuse myself. But based on what people actually, like, many people like that follow the course, pay those 8K, 10K. Even I've known one person that actually paid 25K to RIM. I didn't know it was possible to pay 3 times the same courses. But the thing is, it is really confusing, because then you see everything as inducement. Inducement has a purpose, like the name. Look at the definition of the name. Inducement is supposed to trap you in the opposite direction. It's not a break of structure, an inducement. It can be, but there is more into it. Just backtest it. That would be too long for me if I start talking about this right now. I would need an hour or two minimum.
We had quite good questions from this session, honestly. Last time it was most probably NPC questions, I won't lie.
I don't respond to NPC questions and stuff like that this Sunday. I have other things and better things to do with my Sunday. So I take times here for the serious people that have actually pertinent question. But yeah, I want to do something else.
Yeah. Okay, so we're good for this session. So you guys have anything else to ask? I'll give you like 5 minutes and then we end it.
Okay, I have one question.
Yep, go ahead.
Regarding to your earlier statement that inducement and break of structure, that people think break of structure is an inducement. Isn't that like the intraday thingy? Like when it's an intraday break of structure, that it's not an inducement?
Bro, these concepts work regardless of the time frames, right?
Yeah.
The principles are always same. Doesn't matter if that's a 5 second chart, that's a weekly chart, right?
Okay.
Good. So yeah, that's pretty much doesn't really matter. There's an inducement on intraday. That's an inducement. Work with it. If that's a break of structure intraday, then work with it, right?
Yeah, but like I mean, what you said about break of structure and inducement is not the same. Like
yeah, it's not the same. Yep, different cycles, right? Two different
Can you
stuff.
give me I mean, for you, there is no wrong answer. What is the characteristic of an inducement for you?
Yep.
For me?
Yeah.
The thing is, I haven't watched Adventure the Whole yet. I just
No,
watched
no. Just for you, because you are using the term, so you have a
okay.
definition.
Like for me,
You have a definition in your mind, so just say it.
in my mind, I'm just thinking of like when we check the like Asian range, like above it is an inducement,
See,
and everything.
Why?
Up,
Why?
that,
Because this is actually not correct. But why?
yeah, that's more of a pattern, right? You're learning a pattern.
that's just how I like understood it when I watched the course. Really.
Okay. And what's the other characteristic?
What?
What the other characteristic of an inducement?
Oh, inducements like previous, like the previous day's high. I would have marked it like that.
Good. Yeah.
Okay. But you see, that's the issue. Is like I mean, I'm not criticizing you.
No, I'm just
It,
taking the feedback because I'm
uh,
learning. Like, yeah.
okay. Most people can't even define what is inducement, but still using it.
Yeah.
Like every time someone is talking about inducement, I ask for a proper definition, and no one can respond. But in their chart is written, oh, inducement. That when you approach a trading course, please consider this course as a uni course. Okay, there is value in the meaning of word that use inducement. Usually, I mean, you need to ask yourself, what is an inducement? What is the characteristic of an inducement? You can't use something that you don't understand, if that makes sense.
Yeah. You don't need to mark it till you understand it, right?
And I'm pretty sure that no one here in the chat knows what is an inducement, or it is. You need to be more. And there is one issue with the course is because there is 30 videos, people try to rush and watch the 30 videos within a week. Watch 3, 4, 5 videos, backtest for a week.
Yeah,
A
till you
week done.
understand those stuff, right? I've
Yeah,
said this multiple times. If you watch, there are like 7 or 8, 7 chapters, right? If you watch one chapter of it, go to FX Reaper, backtest it till you understand it, right? Then move towards the next chapter, right? Backtest only the stuff that you've learned in the chapter one. Don't need to add other stuff from yourself or anywhere. And again, the way that you told how the inducement means to you is not actually an inducement, but that's more of a pattern recognition, like the other retail strategies. Obviously, we are also retails, right? Like this is double top. That's how they understand it, right? For you, this is Asia. This is inducement. That's also a pattern, right?
Yeah.
This is a pattern. This is a pattern. You don't understand what's happening. Why is that happening? So yeah, don't take it as a pattern, bro.
I have one question.
Yep.
What's your prediction for tomorrow?
For tomorrow,
nah, come on, bro, come on.
bro. Save the prediction. I want tomorrow's data first, right? Then I'll make my decisions. Right now, it's between
Yeah.
these 2 points, and that's what I can tell you.
Yeah, we are intraday trader until the day is open. There is no prediction to do, and I hate this word prediction.
Yeah.
I usually don't respond when someone tell me about prediction. I don't respond.
Right now,
Like,
I'll
do
ask you one thing, right? Is there anything you see that this thing says? If not, then your question is invalid for me, right?
Okay, right.
Right. That's it. If anything isn't there that is following these points, then why am I looking at it, or why I'm engaging in the markets?
I got a question. Can I ask?
Yep, good.
It's for Vendetta. We were talking about inducements and breakout structures and the calisthenics after. What's your like? What do you look for? What's your like after
Liquidity.
inducements? What difference?
Liquidity. An inducement, when there is inducement, there is liquidity. You can see why. I mean, how can you see that? The candle will be what? You will see what? Vector candles. What is the meaning of a vector candle? Why the market is moving that fast in that particular levels? And why do we have a reversal after? As I said, like inducement, because then if you have a trending market with higher high and higher low, okay, when we break the higher high to create a new higher high, is that an inducement? Is there liquidity on the previous higher high? No. Okay, there is no liquidity, so that's probably just a break of structure and a continuation. And guess what? Up, we have a new higher high. And then we reach a certain level that because you did your analysis, and then you see some liquidity. It can be a build-up, it can be whatever. The best example of inducement is the build-up. You have a build-up, you have a graph of liquidity, and then you have a reaction on the opposite side that align with the higher time frame trend trading market. And then on the lower time frame, you have an inducement. On the higher time frame, you have a continuation. And then what? You have an entry on the mitigation, and then you can capitalize of the market.
That's a whole continuation model that he just explained.
No,
Yeah.
that makes sense. That makes sense. No, I get you, bro.
Yeah, perfect.
Yeah. The build up for liquidity and then the inducement. Yeah, the liquidity is the key. Yeah.
Yeah,
No,
exactly.
that
Bro,
makes sense.
liquidity is the key.
Yeah. No, I understood. Now that you said it, bro, it actually makes
Yeah, but
sense.
the thing is, I wanted someone to say it, because
No,
that,
okay, you're right.
if you lose inducement, because you can't talk about inducement before talking about so many things before,
Yeah.
like structural cycle, like liquidity. That how do you want to have an inducement without liquidity?
Yeah.
It makes no sense,
No,
That's why.
Yeah, also one more thing is that build up isn't only this channel or or this box where price is like this. This is not the only build up. There are multiple different build ups, right?
Exactly.
Yeah. No, that
Exactly.
makes sense. Build up liquidity and yeah.
Yeah.
It all goes together. It all goes together.
Yeah,
It makes
exactly.
sense to me, though. Actually, Vendetta, you explained that good. Yeah, thank you, man.
Yeah, no worries, but as I said, I could make I could talk about inducement liquidity for 6 hours, but that's another stuff because I was when I start with this, I didn't have any course, so my path is a bit different. But yeah, you need to that's how do you say it? You need to put weight behind the meaning. Behind word. When you're using inducement, make sure that you know what is inducement. Ask yourself the question: what is inducement? If you can't even respond to this, then don't use it because you don't know what it is.
True.
They learn what it is. Go toward the information. So like these people that talk about structure and they don't even know what is structure.
Yeah, exactly.
They people are like, okay, structure is a high low. Okay, cool, but that's not it. There is more into it. Like it's if it was that easy, I will actually teach my nephew. He's 8 years old. He can drew some higher high and higher low.
Work on him, Project Nephew on the way, trading Bitcoin.
Yeah, I know. That's my new project Mbappe.
Yeah, retirement project.
But I don't want to wait 16 years to be retired. So no, that's
Alright.
that's okay.
Yep, exactly. That's what I said earlier. All right. Any other questions, guys? Benita is here, so you guys can ask him.
Yeah, I have 10 more minutes.
Yeah. So this is like
Vendetta, do you also
questions.
trade like liquidity, or do you trade like a different style?
Well, we all
Is it
trade
like
liquidity,
the
right?
same one? Yeah, okay, that's good.
Yeah, we
Yes.
trade liquidity and then market flow.
Yeah.
Alright. Makes sense.
I'm gonna give you 2 hints right here before ending this. Understand, right? Price objectives. This is really important. And the other thing is going to be understand proper reactions before jumping into anything, and trade less, right? Trade less. Understand it more. You don't really want to catch every single move. That's not how it works. That's not how the profitable traders make money, right? And you're good. Just don't ask me to explain this stuff right now. It's again quite long session.
Can I just have another question?
Yeah.
Okay. When I backtest,
Yeah.
like when we let's say it's Asia session, should we just skip through Asia session to like London, or should we actually like try to understand why Asia session?
Right. So
reacted the
wait for
way it
Asia session to end and then understand what's happening in the Asia session. Every session has its own characteristics, right? And
Okay.
I don't know if anyone has said the same thing, but the same way liquidity works around Asia session, it works around London session, and then it works around New York session, right? It's all the same stuff.
Yeah.
Cool. So each session guides the next session. So Asia session guides London session is going to guide the New York session. They all go hand in hand. So you need to understand every single stuff. That's why I said that if you want to backtest in such a way that you understand every single move, right? Difference between understanding every single move and trading every single move, right?
That makes sense. That makes sense.
Perfect. All right, then I think we all are good, and we can end the session, right? Okay, perfect. Then
Have a nice Sunday, guys.
yeah, you all.
Yes. Thank you, Vendetta. Thank you, Spanky. Thank you, guys.
Thank you guys. Bye bye.
Welcome, guys. Bye.